So we've seen the peak and valleys. Now let's see the other type of key levels that I mark on my chart when I'm on the higher time frame and I expect price to react to it. Okay, I'm trying to find where did I put my drawing. Okay, I have all this. I will have to show you. Just wait. The second one is what I call a gap. Why do I call it a gap? It's because it's just an intersection, a continuation. Most of the time the candle do this, and then if you watch properly, certain brokers print candles like this, and in the middle there is a small gap. Okay, that's why I call it a gap. In the middle you will see there will be a small gap, but when the candle is correctly printed, you will see the close of the first candle is the exact level of the open of the second candle, and that's what I call a gap. But this is a gap level. We just call it that way. The name is not relevant, but we understand that is the intersection of the two candles when it stopped and the other one started. This level is also a key level on the higher time frame. Why? Because if price action come from this, as soon as we see price return here, we could expect a reaction, either a reversal or a continuation. Continuation is still a reaction to a level. So the same here. If price went up, okay. Oh, I did it wrong. Sorry. Price should go this side. Yeah. If price went up, and then we see price return to our level, we can expect to see a reaction. Okay. This is how you trade the gap. Remember how we traded this one. We don't take in consideration the wicks of the candles. We only consider for our levels the bodies. For the wick, I will explain later, it's something else. But for the bodies, we don't consider the wicks. We only take the close and the open of the candle. I hope you understand that. And like I said, just to remind you, here we had a reaction. It can be a reversal or a continuation. I'm just showing you with the drawing so you can understand what price could do. And here we could also have another reaction coming down, drop here on that level, and react from here. So we can have a price action, go and do whatever he wants, but as soon as he come back to our level, we can expect price to drop from here or to reverse from here. Same here. You see, these are the key levels. I'm going to put them in blue now so you can see them clearly. And we are going to go to the chart. I'm going to show you the second type, the one that I call gap. Okay, this is how I mark my key levels. If you know these two, you already know you will have many levels on the daily, on the weekly, and the H4. The third one is the breakout that we call engulfing, but I will come back to show you later. Let me go first down here and explain to you how we can utilize and how we can mark our close open gaps. Okay, first look, we have, what do you see here? As soon as price closed and then price opens, you see the markets react to the level, and we have a rejection from this key level. Let me go to the second one. I see a gap here. What do you see? A rejection. I see a level here. What did price react? Now, what I want to tell you, the A and the V, so the peaks and the valleys, are more are stronger than the the gap levels, because the peak and valleys um, are sometimes located in supply and demand zone. That's why they tend to be stronger than those other levels. Those other levels can be broken easily, but when they are used correctly, they can also help us detect where price could react, and you can see some major move coming from these levels. Especially if you use the higher time frame, you can see how the gaps create reaction from the market. You have this one here. Do you see the reaction? And let me show that some other ones before I show you the breakouts. Okay, yeah, you see the peak and valleys. So just train yourself and go to the chart and start to notice and try to find levels everywhere on the chart. Go on the 1 hour time frame, go on the daily time frame, any pair, any instrument, try to find the gap. Okay, trying to find the peak and valleys. Everything you see, everywhere price react, it react to another level. You can't fake it. It's everywhere. You have this level. This is a A. Let me look for another level. Okay, we have this one. I can see levels. There are levels everywhere. You see. Now, if you mark them on the daily, on the weekly, so you have levels that are very important, because when you trade on the 5-minute and the 15-minute time frame, on a lower time frame as an intraday, you can reach those levels and expect reactions. So let's go now. I'm gonna explain the other one, the breakout. Where is it? Where did I put that one? Okay, they're up here. Now look, that breakout is here. The breakout is a level that we can find in an engulfment. So that's why I write engulfing here, so you can understand. But this level is when a candle break the open of the other candle. That candle here opened here, dropped down. We had a valley formation. Now price went up and broke that level. As soon as we break the open of that candle, we have a breakout. We could call it engulfing candle, but this is a level we can mark. This is a key level. So let me show you. We said this was a valley, and this is a peak. So when you have an engulfing formation, you have two levels at the same time. But this one is the simple one. You have the classic. I hope you see it here. You have the classic and you have the complex formation of engulfment. The complex. You have the complex one and you have the simple one. Okay, the simple one is 2 candles. The complex one is 2 or more, but sometimes I just stop to 3. Okay, 2 or 3 or more, and you can just understand that price is doing the same thing, because this candle, if it's a 1 hour, for example, now you have 2 hours, you can see how price reacted, and if you mix them, it's just one candle. That's why we call it complex. It just printed in 2 hours, but it's the same move. And in this complex, you have all the levels that we've seen before. You have the peak and valley, you have a gap, and now you have the engulfment level. If you see the engulfment level here, okay, you mark the level here, you know where the peak is. The peak is here. and you know where the valley is. The valley is here. Okay, you also know where we can find the gap. Okay, and those are the levels that I mark. Let's go quickly on the chart. I'm going to show you the engulfing and or the breakout. Oh, I didn't show you how price will react to the levels. Let me show you quickly. Sorry, I'm doing this freestyle. I did not plan anything. I'm just making this video quickly for you so you can have this is people call this basic knowledge, but this is the knowledge you must have, because if you understand this, it will make your trading very simple. Okay, see, if the price went up on the engulfment, now you expect price to reject from here, or you can see price break this level, come back to our valley, and from there react. Okay, so you have two levels from the engulfment, and you can expect two different reactions. Okay, you can see here too, same thing. When you came back down, price could just react like this, or price could just break this level first, bounce here, go look for the A level or the peak, and then drop lower. Okay, you have the same situation here, but you just add the gap. So you have, if price went down, it can stop here, or price can come from here, stop here, or come from here and stop here. So if now this is a daily candle, if this one is a daily candle, sorry, let me take this away first and then I can explain. Oh, I want to take this away. Okay, good. You see now, if this is if this was this is classic and this is complex. If this was to Monday, Tuesday, Wednesday, you can expect the coming days to do this, and sometimes you can have reaction on both levels. Because it's a daily level, it can give you trade in the day. So these levels can be watched every day, and you can expect to see price react to them. It's not that you have to choose which one. No, you have to observe which one will give you the reaction you're expecting, and from there you can take your trade. Okay, and the same here. You could have a drop coming to this level, test this engulfment level, and then push up. This is a breakout level, and here same thing, go up, and yeah, price could return here and go back up. It's anything can happen. You just need to understand your levels. You don't need to trying to predict what price will do. Maybe price could come back down here and react from here and drop again, okay, and touch here and create a double bottom and come here and touch again. Anything could happen, but you know your levels, and you know that price will always have 3 levels to react from. Okay, so I hope this helped you. I'm going to explain to you now how we can interpret this in a line chart, and I will explain to you the difference between the key levels and the swing levels.